While most of the world is enjoying its weekend and switching off from the news, the most dangerous financial event in modern history is quietly lining up to begin. Tomorrow night, when futures markets reopen in Asia at 6 p.m. Eastern Time, what we are calling Black Sunday will officially start. This is not a random market fluctuation or a routine correction. It is the moment a global liquidity crisis, triggered by China's estimated $688 billion withdrawal from the system, slams into financial markets like a tsunami. Traders aren't calm. They're bracing for impact. Expectations are already forming around a limit-down open in the S&P 500 and a violent limit-up explosion in silver. The peaceful calm of the weekend is an illusion. The storm is already here, and by Monday morning, the financial landscape will be fundamentally unrecognizable. This is not speculation or fear-mongering. The market's survival is not a matter of opinion. It is a mathematical problem, and the math no longer works. Global liquidity is evaporating, and without liquidity, markets cannot function. Most retail investors don't understand that markets never truly sleep. The most important moves don't happen during the New York trading session. They happen overnight, in the dark pools of Tokyo and London. This Sunday night carries the highest risk of a catastrophic gap-down open since 2008. A gap down means the market opens 10% or more below Friday's close. There is no chance to sell, no opportunity to hedge. You simply wake up, log in, and discover your portfolio has been wiped out. The algorithms that now dominate markets are programmed to sell first and ask questions later, and once Asia opens, the selling will be indiscriminate and brutal. China's liquidation of U.S. debt has effectively pulled the floor out from under American markets. For 2 decades, Chinese capital quietly supported U.S. asset prices. That support is gone. In its place is a liquidity vacuum. When markets reopen on Sunday night and attempt to find buyers, they may find none. Bids will vanish. This is how real crashes happen. Not because everyone sells, but because nobody is left willing or able to buy. The exit of the world's second-largest economy from the U.S. dollar system is the catalyst for Black Sunday. Anyone holding stocks or bonds through the weekend is taking an existential risk. Losses sustained in minutes could erase 5 years of gains almost instantly. Pension funds, already structurally insolvent, sit directly in the blast zone. A 20% market drop would force forced liquidations at fire sale prices, creating a self-reinforcing death spiral. Your retirement is sitting on a fault line, and the earthquake is scheduled for tomorrow night. Normally, the U.S. government relies on the so-called Plunge Protection Team to step in during crashes. But this time is different. They are out of ammunition. They cannot print money fast enough to offset the selling pressure coming from China and the broader BRICS bloc without destroying the dollar itself. They will attempt to stabilize markets, but they will be overwhelmed. The safety net is torn. As stocks implode, capital will not disappear. It will rotate, and that rotation leads directly into silver. Money fleeing collapsing paper assets will rush toward the last remaining safe havens. Precious metals. We expect a historic God candle in silver, a vertical explosion that could send prices past $100 in minutes. This is the safe haven rotation in real time. If you hold silver on Sunday night, you're holding the winning ticket. A crash on Sunday night almost guarantees a bank run on Monday morning. When people see their portfolios evaporate, panic sets in. They rush to ATMs, only to discover the cash isn't there. Banking holidays and withdrawal limits follow. The financial crisis and the banking crisis are inseparable. When one falls, the other follows. Crypto markets, which trade 24/7, will react first. Expect a violent flush in Bitcoin and altcoins as traders liquidate positions to cover margin calls elsewhere. The initial shock will be brutal, but unlike stocks, crypto may recover faster as investors rediscover its non-sovereign nature. Still, leverage this weekend is a death sentence. Notice how the mainstream media is silent. That silence is intentional. If they warned you, everyone would rush for the exits at once. Instead, retail investors are being kept inside the burning building while elites escape through private doors. History rhymes. The crashes of 1929 and 1987 both unfolded on Mondays for a reason. Bad news accumulates over the weekend. Fear compounds. By Sunday night, psychology breaks. Today, the same ingredients are present. Geopolitical conflict, banking stress, collapsing confidence, and massive bond market instability. The true epicenter of this crash is the bond market. As yields spike due to Chinese selling, stock valuations mechanically collapse. If the 10-year Treasury yield breaks 5%, the S&P 500's fair value drops by as much as 30%. Circuit breakers won't save the market. They only delay the inevitable. A trading halt is not safety. It is a prison door slamming shut. This crash is not an accident. It is a wealth transfer. Institutions are positioned for collapse. When prices implode, they profit, then use that capital to buy real assets, homes, businesses, land, for pennies on the dollar. For 15 years, investors were trained to buy every dip. That era is over. With inflation still raging, there is no Fed put. This time, the dip keeps dipping. Fear overtakes greed, and panic selling creates a vacuum where prices free fall. Markets are now run by AI bots, and bots don't hesitate. When volatility spikes, they sell until accounts hit zero. Any escalation over the weekend, war, blockades, geopolitical shocks, will pour gasoline on the fire. The financial system is the match. Geopolitics is the tinder. Black Sunday is the explosion. Survival, not profit, is the objective. When Monday arrives, companies will be gutted, banks will wobble, and headlines will scream crisis. Those holding hard assets will be relieved they prepared. Silver, long suppressed and deeply undervalued, is positioned to outperform everything. As trillions flee stocks, even a small allocation into silver sends prices into the stratosphere. This is not the end of the world. It is the end of an illusion. The moment math reasserts control over fantasy. Liquidity is the lifeblood of markets, and China has turned off the tap. If you're watching this now, you still have hours, not days. Hedge risk, reduce exposure. Own real assets. Watch silver closely, because while the paper world burns, silver will shine.